President Trump has kicked off a trade war with our largest trading partners with newly enacted tariffs, which threaten to raise inflation again and hurt the U.S. economy at a time when new economic data is already pointing to weakness. In today's video, we're going to look at the magnitude of our imports this is impacting, which goods are likely to see the most increase in prices, and what all this means for the housing market. Let's get into it. On March 4th, President Trump enacted 25% tariffs on imports from Canada and Mexico and increased tariffs on Chinese imports from 10% to 20%. This is a big deal, make no mistake about it. These three countries together made up 41.5% of all imported goods in 2024. Mexico held the largest share at 15.5%. China is close behind at 13.4%, and Canada made up 12.6% of imported goods. What Trump has essentially done is raise the cost of almost half our imported goods by 20 to 25%. There were a few exceptions that were made. Canadian energy products will only have a 10% tariff, and the next day Trump announced that auto industry tariffs would be exempt for 1 month. But there is no way that this is not going to increase consumer inflation in the U.S., and it comes at a time when inflation is starting to creep up again. As of January, the year-over-year growth in the consumer price index was at 3%, up from the recent low of 2.4% back in September. Now, these tariffs are being implemented in the beginning of March, so the CPI report released next month will be an important one to watch, as it could give us a sense of the immediate impact of these tariffs on consumer prices. But some price changes may take a few months or longer to work their way through the supply chain, so we may not know the full extent of the impact right away. This is not good news for the housing market, as it could have an impact on mortgage rates. If inflation is on the rise again, the Federal Reserve may be forced to raise their Fed funds rate, which would put upward pressure on bond yields and subsequently mortgage rates. Now, let's take a look at which goods are going to be impacted the most from these tariffs. We're going to focus on the top 4 goods imported from these countries, as they make up the bulk of the imported goods from this group. Total imports from China, Canada, and Mexico totaled $1.357 trillion in 2024, which was 41.5% of all imported goods. Electric machinery and parts was the largest category, totaling $222.2 billion, and these three countries made up 46.5% of all electric machinery and parts the U.S. imports. Industrial machinery and parts came in at $217.6 billion, which was 41.7% of all imports in this category. Vehicles and parts were $203.9 billion, 52.9% of our imports for this category, and energy products totaled $141.5 billion, or 58.8% of imports for this category. Let's just stop and think for a minute about how this will impact the U.S. economy. Nearly half of all our imports of electric and industrial machinery and parts are going to increase in price by 20 to 25% for U.S. companies who are purchasing them. That is going to hit the entire economy by increasing the cost of new machinery and the parts to maintain existing machinery. More than half of our imports of vehicles and parts are impacted, which is going to hit the automotive industry. More than half of our energy products that we import, which is mostly crude oil coming from Canada, will be impacted. Higher energy prices also hit the entire economy. Granted, Canadian energy products will only have a 10% tariff, but these products, machinery, parts, and energy are the lifeblood of our economy. As an economist, I fail to see President Trump's strategy and how this is good for the U.S. economy. Now, if he had a strategy of investing in domestic manufacturing to reduce our reliance on these imports, it would make more sense, but we have yet to see such a strategy materialize. He's mostly just claimed that the tariffs themselves will incentivize manufacturers to move to the U.S. What this is going to do is raise domestic prices, and not just on these goods we've highlighted today. Machinery, parts, and energy affect the entire supply chain. Now, one thing I have to say about President Trump is that he can be unpredictable. It's possible that he could remove the tariffs at any time. In fact, as I was producing this video, Commerce Secretary Howard Lutnick suggested that a trade deal with Canada and Mexico could be unveiled soon, and the auto industry was granted a 1-month exemption just 1 day later. But as of right now, these tariffs are in effect. U.S. companies that import these goods have a choice if they are going to pass on the cost of the tariffs to consumers, but odds are they will. An increase of 25% to a company's input costs can eliminate their profit margin and put many of them out of business. So they will have to pass on some, if not all, of the cost to consumers. This is something that I will be keeping a close eye on as things play out. So if you want to stay up to date on the tariff impact to the economy and the housing market in the months to come, make sure you are subscribed to this channel and hit that notification bell down below. I'll do the research for you and keep you up to date. And if you could do me a favor and hit that like button on your way out to support the channel and help it grow, it would be greatly appreciated. Thanks for stopping by. I'll see you in the next video.